This content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. The Better Traders is not a broker-dealer. We are not an investment advisor. We have no access to non-public information about publicly traded companies or cryptocurrencies. And this is not a place for the giving or receiving of financial advice, advice concerning investment decisions, or tax or legal advice. The value of investments and the income derived from them can go down as well as up. Investors may not get back the amount they invested, and past performance is not a guide to future performance. Hey guys, what's up? It's me, Moon and Papa, and you're watching my live stream here on YouTube. Thanks for joining me today. Wherever you are in the world, whatever time it may be, this live stream happens once a week, and it has all year on Thursdays at 11 a.m. Japan Standard Time, and it would be 9 p.m. East Coast Time, New York. It would be 6 p.m. West Coast Time, like LA. Sorry, I'm only able to think about North American times, not the rest of the world, but I know that there are some of you that are just from all over, which is fantastic. In today's live stream, I'm going to be talking about Bitcoin a little bit, the market a little bit, but I want to just provide a little bit of input and tips on how to practice trading and what kind of charts are really good for practicing trading. So that's what I want to really focus on a lot today. I shared something just now with the club members, and I think this is good enough for everybody else on YouTube as well. So I'm going to share that as well. All right, let's jump right over to, oh wait, no, almost forgot. If you are new to this, you're just kind of stumbling on this, I have live streams every week. So you can go ahead and hit the notify me button there, or you can subscribe, like this video, have videos. I haven't been posting as much towards the end of the year because things are starting to wind down in my mind, as I think that that's probably the same for a lot of you out there too. So I'm also, let me say it this way, when I'm not posting a lot of stuff, that means I'm building a lot in the background, because there are a lot of things that I'm doing in the background that I'm working on, that I'm getting ready to share with people that are taking our courses, and also people taking that are in the club. So probably after the new year, I'm going to be posting a lot more, but yeah, for now, it's a little bit more sparse. I usually do post a lot more, but right now I've just kind of eased off on it just because it's easier to build when there aren't these deadlines for the videos every single day. So let's pop over here and talk about BTC and the market. So interestingly enough, there was news about the Bank of Japan changed their rates of the bonds. And I still honestly don't really understand it, probably the same way that a bond person wouldn't understand how blockchain works or how DeFi works and liquidity pools. So it's okay. No offense taken on either side, I'm sure. But the main thing we need to see is what does Bitcoin as a market, as a trading community, what does how should I say this? What do the stakeholders think? So there was bad news initially, and then boom, it shut up and recovered. This is like 2019, like January, February, over and over again. Like, this was annoying. This was a grind. Not saying that we're there in price action, but it's very similar. So yeah, I don't really think that that's not really enough bad news short term to spook the market, in my opinion. So not really concerned about how it affects crypto right now. I have seen posts that have gone into depth about it being a long-term negative effect on all markets, that we're not going to see a direct immediate effect, but I don't think it really changes anything, in my opinion, as far as where I think BTC is going to go in 2023, or maybe by the end of this month, I don't know. But I'm still expecting BTC to drop down here to 13,880 and down here to basically above 10K, maybe pierce below 10K, just like I've expressed so many times on so many TBO market update videos and my 2023 market update video as well. So nothing's really changed for BTC in light of what the Bank of Japan has done. Bitcoin still has a use case. Bitcoin has a limited supply. No one can go in and change the difficulty. No one can go in and change how many coins there are or how many coins are distributed per block. It's fixed. Therefore, it's not manipulatable. Wait, it's not as easily manipulated as fiat currency. That would be a much clearer way to say it grammatically. Okay, so yeah, I'm not really seeing a big change, a big shift over here. We're going to look at some other crypto pairs in a second, basically at the top 30, just to show you the sentiment. But right now, BTC is doing what it's always done. It's just kind of hanging out. If we can just take a second, though, to look at market structure and price action. So we get a big fall, takes a little bit of time to rise up, and it falls down. Takes a little bit of time to rise up, falls down. Takes a little bit of time to rise up, falls down. Takes a little bit of time to rise up. We haven't really seen the big rise up. We saw this move happen, what was this, last week? Where things were getting a little excited because of the CPI print. Doesn't it feel like forever ago? It's the FOMC meeting notes, and then it fell down. But we haven't really seen a significant, let me go back over here. We haven't seen a nice rise up yet. So one positive thing is that, yes, I know we've broken below this. It's not so good. If we were to draw a trend like this, just something really simple and really easy. Oh, nope. Like this. So yes, we have broken this bear flag, essentially. Not a perfect bear flag. Depending on how you draw it, it could also be drawn like this. But we haven't pierced it yet. We haven't really gone to the downside of it yet. But if it happens, again, I'm expecting to go lower. So I'm not expecting any dramatic moves to happen right away. I still think we're going to be grinding to the side. So if BTC is going sideways, that means what? If Bitcoin's moving sideways, that means that most altcoins are going to have room to breathe. So if we look at the dominance for others, Bitcoin dominance is doing well. It's up to 42%, but we're not seeing price action for BTC. Ethereum dominance is going sideways. Others has been smashed. It's been smashed, crashed. It's been in a bad spot. But this is looking at everything. So one interesting thing is that going off of dominance, looking at BTC's price action, knowing that it's going sideways, this gives a lot of leeway for alt tokens to go up higher. Not all of them, but a lot of them. Let's look at traditional markets to see how they've responded to the Bank of Japan. The news about that, yes, it was initially bad, but now it's starting to curl up. Again, it's so strange to me. It doesn't really make sense, but on the nice side, on the Dow Jones Index, we can see, let me fix that so it's a little bit easier to see. So the Dow Jones Index bounced off this trend line. That's amazing. If it can hold above this trend line, there's a greater chance of it at least coming to test this price of, or rather value of 34,600, this previous high right here. That's incredible. Now it's a different chart compared to the SPX. I get that. But if the Dow Jones can move up another 3.8%, then a 3.8% move, conveniently enough, would be basically right here on this trend line. And to see it fall down would make sense. Both of these markets would fall after that. But to see a move up in markets makes sense in the short term. I saw that Nike had really good earnings reports. And the market is very excited about that. If we go back to the daily, yeah. That's a huge gap play right there. Oh boy, that's a big 13% move. Gap fill strategies, super fun. One thing also in regards to traditional markets is that the VIX is surprisingly not fearful. Okay, so I just want to go back to that whole Bank of Japan bond thing. A lot of people are really nervous about it that know the bond market. I get that. I've been seeing more and more posts on Twitter from people that are in the bond market. They're trying to explain this stuff, and I don't see the immediate effects. And it could be that I'm ignorant, and I accept that. That's fine. I don't know much about it. But when I look at the charts and I see that so far in the short term, there isn't an immediate effect, that's fine. But a long-term effect, that's kind of hard for me to swallow, I guess. It's like, well, yeah, it could be a long-term effect, but it could be a lot of other things that happen between now and like 6 months from now. Like there's still a lot of things that could go badly wrong, horribly wrong in that time frame, right? So, oh, I gave it away. Wrong one. I gave it away. So when I look here at the VIX, I mean, gapping down here, coming down to this crazy line of 20, which is wild for the VIX. Mainly because the VIX has just been, if we, actually, let me just do it real simple like this, just a second. If we just look at the VIX, for the most part, it's been in this upper range above 19 for the majority of the last year plus. Well, let's go like here. So over a year. Yes, back here in 2021, it was down as low as 14, believe it or not. Oh, let me fix that. But it's been in this upper range for quite some time, for 80 bars, so almost, yeah, 560 days. But if we zoom out and we look at this on the weekly time frame, what I find fascinating about this is that it's been in this upper range, this blocked range right here, for such a short time compared to the normal areas of the VIX. So if we were to apply a moving average just to see where we really should be, where the norm is, and I'm actually going to mess with this. So this is okay, good, 200-week moving average, perfect. And actually, let's do an EMA. We'll do 7. Good. Okay. So we are right on target, just about, for where it is. But I want you to pay attention to something, because the VIX is never really going to go straight up or straight down. It's not a stock. It's just a volatility index. Therefore, it's going to oscillate back and forth. I mean, I can't make this stuff simpler to see. So there have been periods where it's gone up really high. Note the date, 2001. This is the dot-com bubble bursting, and the market fall, or rather volatility falls after that. And then what happens 2008, 2009, volatility increases because of the housing market crisis. And then it tops out 2012 and it starts to fall again. So we've seen it start to shoot up ever since, conveniently, 2020 when we had the COVID crash, and now it's been increasing. So the interesting thing is that we're not on this part of it yet. We're not on this downside yet of this hump. We're still moving up, something similar to this. So we could move up higher as far as the moving average goes on the 200-week. But still, I think it's interesting to look at what's happening with the VIX right now compared to what the moving average is showing us. So yes, it's moving on the up and up, but we're also seeing the VIX starting to weaken a little bit. Let me show you what I'm talking about. So bringing in this trend line, I have two actually that I want to show you. So we have this short term, let me make this one right here thinner so we can see it better. So we have a longer term overhead trend line. We're not going to take this into account because that's a super volatile event. That was the COVID crash. So looking at this, it's interesting that we're getting lower highs, lower highs, lower highs. We're getting higher lows. Essentially, we're making this really nice wedge. So a wedge, if we are going to look at this like a real trading pattern, like a wedge, then we have two options for this. Duh. Thanks, Moon and Papa. You're a genius. The one option is for us to break out of the wedge to the downside or to shoot to the upside. Now, the interesting thing is that if we take into account where our moving average is, actually, let me do it like this. If we look at our moving average, where it is, and we know that anything above 30 is like, this is very, very, very stressful, but it doesn't happen often. Most of the time, if we're being honest and we're looking at this, the VIX is primarily in a range just about here. It spends most of its time between, let me get rid of this. It spends most of its time between 15 and, what is this, 24. And even the moving average tells us that too. We could actually adjust this to the moving average, and it works really well. So let's say that this is the normal range for the VIX to play in, about 14 to 24. So if that's the case, and we're expecting this range to continue to stay solid and strong, that means what? Does it mean that it's more likely for the VIX to go up higher? It could, but if we have a wedge in play, what's more likely to happen with this wedge? to me, it makes more sense, as dumb as this sounds to some of you, it makes more sense to respect this range that it's been trading within, not trading within, but that's just oscillating within. We've seen a nice up, down, up, down, up. So I think that we could still see some volatility that will shoot it up higher, sure. But eventually we're going to see it come back down into, and hopefully not by 2026, good grief. It's a long time. Let me do it a little bit like this. So I think it's realistic to see it come up still like this by 2023. And then we're going to start to see it come back down and it's going to reset. By the time we get to our next bull market for BTC, which I think is going to be in 2024 or so, 2025, we're going to see the VIX fall. Most markets should recover, in my opinion, unless things are just going to be astronomically terrible for a long time. You can see here back in the .com bubble, for the most part, everything was above 18 or so. It was in this really stressful period. If we go to where we are right now, for the most part, we've been actually a lot lower. It's only just this year that we've been super high. And even in 2018 and 19, it was in these very relaxed levels. So I'm saying this stuff to just share a little bit of what I'm thinking as far as market volatility goes, and that I'm expecting the VIX to reflect volatility, which is what it's supposed to, of the S&P. But do I think it's really going to shoot up higher? We could have some terrible things happen. Yes, that's very true. We could. But we are near the apex. We're near not the apex, but like the peak of this oscillating pattern. Therefore, it makes sense to see it come down after this. So what does this mean for Bitcoin? You're probably wondering, great, that's nice for traditional markets. Well, Bitcoin does follow traditional markets. And if that's the case and Bitcoin does follow them, then while there should be volatility for traditional markets, which would push Bitcoin down a little bit in the short term, maybe not that, won't take that long, I don't think. I'm thinking like by here, we should be down there at least. But we're going to see BTC just kind of do this for a while, and it's just going to pay attention to what S&P and the Dow is doing. And if there's going to be volatility, sure, it's going to fall down. But eventually, we have our own independent halving cycle. That's what we're waiting for right now. So we're waiting for two things, for BTC to bottom, and we're waiting for that halving cycle to kick in. So in the meantime, BTC is stable. And now this brings me to look at all the top market cap tokens, things that are at least interesting to me. Most of these are looking terrible, with a couple of exceptions. So these exceptions would be OKX's token, OKB, which has moved up a lot. So this is ranked top 10. I change this about once a week. So OKB, excluding all of the stable coins, which they shouldn't be up there anyway. So this is what, 7th, 8th? 1, 2, 3, 4, 5, 6, 7, 8. OKB, the OKX token, is doing very, very, very well and has been for quite some time, which I find interesting. But then when I look at where it's available, it makes complete sense why it's doing well. So do you see OKB anywhere on a platform that has, one, a very, very big futures market? I don't. Do you see it on Binance? Nope. You see it on Bybit? Nope. Do you see it on, I don't even know what else there would be. Like Bitfinex doesn't even have it. Just trying to think of larger markets. So of course it's on OKX. Of course it's on like smaller exchanges like Poloniex or Gate.io or CoinX, sure. But that says something. That means that there are likely, well, there's basically nothing to really kill it. As soon as you introduce the futures market to a token, there are way more people that will be wanting to short it. Because look, if I cycle through all of these, and I am going to, I just want you to see that there's no real reason why OKX tokens should be up. Actually, let's just focus on exchange tokens. So BNB has suffered some FUD. Sure, that's the case. Yep. Leo is down a lot too, which is Bitfinex's token, I believe. If we go to KCS, which is the KuCoin token, this one's down quite a bit. If we can go to Huobi token, this one is, wow, some wild swings, but still not looking healthy, not looking safe, not looking good. Interestingly enough, OKX's token is doing just fine. Now, I'm not I'm not saying and I'm not advocating for exchange tokens, especially with what's happened with FTT. But I think it's interesting to note that while I do like futures, there are some markets that you just don't want futures to be introduced to. Now, if I were OKX, I would not introduce futures trading for my own token because people are going to short it because it's one of the few tokens that's just doing really well right now. So anyway, I just find that really interesting. So that one is noteworthy. Monero is still a token that I do like. Believe it or not, I still think this one is doing well. Even though the trend is down, it's not as down as other things. It's actually holding up really well for this pretty weak trend line, to be honest. But it's doing well. This one, Ton, which is the open network, has been on fire. Now, this one is crazy overextended and beyond the point of pursuit. Not a great time to practice on a chart like this. If we go to faster time frame, I mean, it's amazing, but we're also kind of capped out, like not capped out, but we've reached some new highs. So yes, it's good for trading if you know how to trade real well. But if not, this gets pretty risky pretty quick. So I have a token, I have a chart that I kind of slipped earlier that I wasn't supposed to, that I shared in the Better Traders Club. And for those of you that don't know what the Better Traders Club is, the Better Traders Club is a subscription-based private server where we have live streams every other week that I also create a watch list for these tokens or for tokens for AB trading, DCA bots, grid bots, did I say AB trading? I think I did. And swing trading. But there's more than that. There are indicators like the TBT forecaster, TBT stop loss hunting alert, TBD alerts. There's even more. There's a lot more, and I'm actually going to be adding more in 2023 to this. So just a quick plug for it. If you are interested in joining a community of better traders, check out the club. And also, before I talk about other stuff, we are having this crazy giveaway right now called the 12 Days of Christmas giveaways. And we're just giving stuff away for 12 days before Christmas. So today's prize is a free access to Mastering Passive Income, which is huge. This gives you access to our most popular bot trading course. You get access to our private server, the TBO Pro, and the backtester. You get coaching with this. You get a ton of input. You get a ton of teaching and education resources, all that stuff. That's insane. So you have to go over here, though, to the 12 Days of Christmas, or if you look at the Better Traders on Twitter, you look them up, you're going to see the post here, and then you'll be able to click the link to figure out all the stuff you have to do, which is follow us on Twitter, retweet, and join our list, which is basically filling out the form. So yeah, you should do that. Okay, let me come back over here to Discord. So this is from the Better Traders Club private server. So I wanted to share a little bit about what it means to practice. So I mentioned this at the beginning. Actually, if we're looking at a playhead, it would be like over there on the playhead, whatever. At the beginning of this live stream, I was talking about good charts to practice trading on. And there aren't always really good charts for practicing trading, for whatever reason that may be. So that chart that I think is really good is this one for RLC BTC, which is the iExec BTC pair. Now, the reason why this is good is for a couple of reasons. For one, it's in a steady uptrend. Don't worry, I'm going to show it to you on TradingView. But we can use the TBO in a variety of ways to help us. So I wrote down all this stuff, and I'm going to show the chart to you over here on TradingView, but I want to help you understand that the club is the place to be. I'm winding down for the year, but there's still a lot of stuff happening over in the club. A lot of stuff. All right, let me pop over here to TradingView, and I want to explain this chart a bit. So let me go to the 30-minute time frame. Okay, so essentially what we're looking at is, let me do something real quick. There we go. I have to change this. There we go. It's a little bit weird now, and a little bit small, but it's okay. I can help you out. So the whole concept of what I have here is quite simple. For one, I've identified a chart that is on a really nice, smooth uptrend. I don't want to look at anything like Ton. because ton has moved up too fast, too quick, like this. This is a little bit scary. RLC, BTC, this is much, I know it's had a big pump, but now it's doing this nice gradual move up. This is the kind of price action that you want to see. So if I go to the 30-minute time frame, what I've done here is I have the TBO, and in the inputs here on the TBO, make it a little faster, not faster, bigger, you can change the speed. Now note, changing the speed only changes the cloud and the symbols. It doesn't change these red and green lines, which are identifying support and resistance. So fast means it's going to have way more noise on it on a faster time frame. So that's why I have it on slow on the 30-minute, just because it's going to have less noise and it's going to give me a better sense of the trend. So if I bring back these drawings, I want to just explain a couple of things with this, why I think this chart is really good for practicing. And practicing should be done with paper trading. Please don't practice with your own funds. That doesn't make sense. Practicing means paper trading, okay? So when you get comfortable with this idea, then all you have to do is identify charts that are on a gradual uptrend, and then you know what to do the next time that this happens. So there are lots of ways to use the TBO. Even without all the text, let me just make this a little bit bigger. So one thing that the TBO does really well is that we have all these lines here for support and resistance, right? Green line, red line, green line, red line. This is a really easy trade where you're looking for support or the price to be near support, sell at the previous resistance, just over and over. Basically an upward ping pong. So we've reached this higher level of, this new high. So now we're falling back down here towards support. But one interesting thing that you'll notice is that every single time the price actually doesn't come down here to reach support. It actually gets within a couple of percent away. So if you look here at this, let me pop this open so that way I'm not hiding any stuff over here. So one thing that happens is that, yes, trying to enter on previous support in a strong uptrend is useless. That's because if we look at this, here's the previous support and here's the next support. Next, we would have missed it if we placed our trades right here. So one thing to understand is that we want to measure to see, well, how far is the previous support to the next low? And we're looking at 2%. We could even take this over here to measure to see, oh yeah, it is about 2.5% or so. What's interesting is that if we continue to measure this out, we're going to see it fluctuate between 2% to 3%, somewhere in that range. Now this one right here was a big burst, which means that it's probably overextended, which means it's going to come down farther. It might come down closer to this line of support. One interesting thing to note, we've seen this happen, well, I've seen it happen lots of times, but here we can even see it happening. To grab this individual one right there. There we go. See that? Well, I'll just do this, 2.5%. It's the same thing. So I have these nice little stair steps up when it comes to all these price ranges. So we want to identify oscillating patterns based off the TBO support line and the next price bounce. That sounds weird, so let me explain it. What we want to do is we want to identify when the price is oscillating, which is just going up and down in a regular pattern, and it's oscillating on an upward movement, which is good. So when it comes down, we want to figure out where was previous support, how far away was or is the new price compared to the previous support. We want to measure that, and that way it gives us an estimate of where it might fall down next. So if we were savvy and on top of this at 7:30 a.m. on Monday last week, the 12th, no, it'd be 2 weeks ago, then we would be able to see, 2% away. So that means this next drop should be about 2% away. And then you would be trading up to resistance. And you would do the same thing about 2% away. If you miss it, you get a couple of times, basically half a day to participate and get in until you can sell to resistance. So that's one thing you can do. And that's basically what I'm outlining here. Another thing to pay attention to, and now let me get rid of all of these because they're super annoying. Great, and let me hide the fib lines. Cool. The next thing I want to point out is this. So pay attention when you're looking at a chart that's on a steady uptrend like this is. Pay attention when price is overextended. That typically means a pullback is coming. That's pretty easy to see even without the TBO. But the beautiful thing about the TBO is that instead of this just being some sort of a trend line, actually, let me do this instead. I'm going to take this text, put it together and block it out so I can use it later. I just want you to see this. So we have a pretty clear, oops, let me draw it like this, right? It's pretty plain to see we have this ascending channel, we'll say. So yes, you could say that, oh, when we're getting close to the top of this channel, that's overextended. That's true. That's right. But the interesting thing about channels like this is that if we were to use a trend line, it's not going to work because it's going to be broken. We'd have to keep drawing it over and over, and then we're not going to reach those same exact values. And most people have a difficult time seeing some sort of curved line like this. So if you do, then the TBO is great because of a couple things. So I'm going to go into the settings of the TBO. I'm going to go to the style. I'm going to turn off the support and resistance lines. I'm going to turn off all the symbols. So that way we're just looking at, come on. I just want to look at the cloud. And actually, let me turn off the F line, the fast line. Cool. So when we're just looking at the cloud, this is giving us a really good idea about where the price is being overextended. So here we have all of our moving averages, the various ones of the TBO, and we get price really overextended, like right here. In 30 minutes, it shoots up 5%, almost 6%. This is an overextended zone. This is overextended because we can see where the general trading area is supposed to be. So anytime we get these really big moves up, there's going to be some sort of a pullback. Big move up, pullback. Big move up, pullback. Big move up, pullback. But note that each pullback is going to be a little bit less, or actually a little bit higher than the previous one. So if this is the case, we should expect the price to come down somewhere around here. It shouldn't break below the previous low. We haven't seen that structure broken yet. So this is higher than this one. Let me change this color. This low is higher than this low. This low is higher than this low. This low is higher than this low. If we break a low like this, then that structure is done. We have to move on. So you might find this late in the game, like I'm sharing with you right now. I understand. But still, it's an interesting chart to practice on because charts like this are great. They are really good for practicing. Let me, reset settings. Good. Just because it, especially with the TBO, it gives you the chance to practice, at least with paper trading, to see how does this work. And this is the 30-minute. We could also go to the 5-minute. Note that if we're going to go to the 5-minute, we really want to use the slow setting in the inputs over here. Let me change there we go, the scale. We can do the same thing. Just note that if we're using the 5-minute time frame, we're going to be making much smaller, tighter gains. And it's going to be overextended way more often because of these pumps and pops and drops and all that stuff. We can still use the 5-minute time frame though. So the faster the time frame, the smaller the profit potential is going to be. So if we move to the 4-hour time frame to where we are right now, then we would have to change our strategy, obviously. But you can see that it still adheres to the same thing. We can see that same pattern up here. We're just going to be trading it differently, and we're going to be making bigger profits on a longer time frame. So faster time frames, like the 5-minute, we're going to make smaller profits. If we're doing a little bit longer, it should be a little bit bigger profits, but it's going to take longer, obviously. So just a couple of ideas to help you practice trading over the new year, over your holiday break. If you get time off and you want to practice trading, this is a great kind of chart to practice on. And the reason why this chart is also really good for practicing on is that it's not moving sideways. I've always found that practicing on sideways markets like this is a real gamble because you don't know if it's going sideways and it's going to break below, or if it's going to break above and continue going up higher. So it's really easy to, or rather it's not really easy, but it's easier to practice on charts that are just slowly inching up higher. So if you do have access to OKX and you want to practice, this is not the time to practice. Back here is the time to practice because we can see that this is just nice, easy, slow uptrend. Stuff like this, yeah, you can, of course you can trade on this. It's just going to be you're gonna have a lot more action, and you're gonna want to pay attention real fast. That's all. Okay. All right, just looking at the comments real quick, and then I gotta cut it because I am over time a little bit. Nice, way to go, Dominic. So yeah, the Gordon bot on 3 commas, yeah, it works really well. It's using the base breaking strategy that Quick Fingers Luke established, which is someone you won't be able to find on YouTube anymore. But Altrady, or the crypto base scanner, that's their bread and butter. But yeah, you can actually use Altrady as well for something like this on an uptrend. So yeah, that's great. Yeah, that's all. That's great. That's fine. I got stuff to do and to work on and to release, and I'm really excited about releasing it, but it just takes time. Okay, so I hope everybody has a very, very Merry Christmas, that you all enjoy your holiday break. I'll see you next week for a live stream at the same time. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.